All right, let's talk about Sunrun's Q3 2025 earnings. This was one of those reports that, when you first glance at it, it looks pretty solid. But then the market reaction just sent the stock into an absolute tailspin. So we're going to dig into that massive disconnect. What exactly happened here?
Yeah, I'm not kidding. The day after the announcement, Sunrun's stock just cratered, dropping over 16%. And look, this wasn't some minor dip. This was a huge sell-off on massive volume. So the big question is, why? What on earth did investors see in that report that sparked such a panic?
Okay, so to get to the bottom of this, here's our game plan. First, we'll hit the actual numbers, the beats and the misses. Then we'll get into the two totally different stories that came out of this. After that, we'll look at the guidance, what's coming down the pike. And finally, we'll wrap it up with our own take, the next call.
All right, first up, beats, misses, and big numbers. Let's dive right into the data from the report, because this is really where all the confusion starts. You had some really impressive wins right next to some pretty shocking losses.
So let's start with the good stuff, revenue. Sunrun pulled in almost $725 million. I mean, that absolutely crushed what the analysts were expecting by a full 21%. Usually a beat that big on the top line, that's a huge green flag. That's what you want to see. But, and this is a big but, here's the other shoe dropping. Their earnings per share, or EPS, came in at just 6 cents. Wall Street was expecting 12 cents. They missed by 50%. A miss that big on the bottom line is a gigantic red flag, and it basically just erased all the goodwill from that awesome revenue number.
So this table really puts the whole puzzle together. Just look at this. You've got that huge 21% revenue beat we talked about, and then adjusted EBITDA. Wow. They were expected to do about $75 million. They came in at $185 million. That's a 146% beat. Plus, they generated $108 million in cash. That's the 6th quarter in a row they've done that. So good, right? Well, apparently not, because the market just completely ignored all of that and fixated on two things, that brutal 50% EPS miss and the fact that subscriber growth actually went backwards by 1%. That's what spooked everyone.
And this leads us right to the heart of the matter, two competing narratives. It's like management and the market were watching two completely different movies this quarter. You had the story the company was telling, and then you had the story investors were hearing, and they were worlds apart. And here it is, side by side. Management's story was all about, hey, we're generating cash, our storage strategy is killing it, and we're being smart about margins. Meanwhile, the market's reaction was, nope, we see a huge EPS miss, some weird new accounting, slow in growth, and we're really worried about your guidance. A total clash of perspectives.
I mean, listen to the CEO, Mary Powell. Her message on the call was crystal clear. We are generating cash while growing our customer base at a healthy rate. She was really pushing their storage-first model. And get this, an incredible 70% of their new installs now come with a battery. The whole idea was to show they're focused on high-quality, profitable growth, not just chasing new customers at any cost.
But investors just were not buying it. That 50% earnings miss was a hole they just couldn't see past. And what made it even worse was this new, kind of confusing accounting change they introduced. It just made the financials murkier. You could even hear it in the Q&A session with analysts. They were really grilling management, asking if this was just some financial engineering to make the cash flow numbers look better than they really were.
So, what is this asset monetization structure? Well, in simple terms, Sunrun is now selling some of its brand new solar and battery systems directly to an investor. That lets them book a bunch of revenue right away. Now, management tried to play it cool, saying it's mostly just a change in timing. But think about it. For a market that's already super wary about complex financing in the solar industry, this just screamed red flag. It added a layer of complexity nobody wanted. So that brings us to the million-dollar question, right? With such strong revenue and all that cash coming in, why did the market's skeptical view win out so decisively? Well, the answer isn't just in the report itself. It's about the context. What was happening with the company before they ever released these numbers?
Which brings us to our next section, looking ahead, guidance and risk. See, you have to put this quarter into the bigger picture of the company's performance and, crucially, their outlook for the future. This is where the whole negative story really starts to bite.
First off, let's talk context. Look at this chart. In the month before this report even came out, Sunrun stock was already down more than 12%. Meanwhile, the broader solar industry and the S&P 500 were basically flat. What does that tell you?
It tells you investors were already on edge. They were already in that sell first, ask questions later mode with this stock.
And it wasn't just the last month. The whole year has been an absolute roller coaster for this stock. I mean, look at this. A 37% crash in a single day back in May. Then a 32% surge after their last earnings report. Then another drop just based on some political comments. When a stock is this volatile, it means investors are super twitchy. Any hint of bad news or uncertainty can cause a massive overreaction.
And that brings us to the guidance, which was pretty much the final nail in the coffin. Now, on the surface, they kept their full-year targets mostly the same, but the outlook for Q4, that was weak. There's a key metric they use, subscriber value, which is basically a guess at how much a new customer is worth over the long haul. Well, their Q4 forecast implied that number would decline by about 5% year over year. For a stock that's supposed to be a growth story, forecasting a decline, that's a huge problem. And look at that cash generation range for Q4. It's enormous. That just screams uncertainty. Okay, so we've looked at the numbers, the competing stories, the context, the guidance. Let's put it all together. This is the next call, our take. What do we think is going to happen next?
We're going to break this down and do a simple three-part forecast for you. First, what we see for the Q4 results. Second, how we think the stock itself is going to behave. And third, our final equity research style rating on the company.
And our final rating is market perform. Look, we don't think Sunrun is a broken company. Far from it. That pivot to battery storage is legit, and the fact that they're generating cash is a massive plus. But, and it's a big but, the mix of slowing growth and that confusing new accounting makes it really hard to pound the table and say this stock is going to beat the market anytime soon. The thing to watch in the next call is simple. Cash generation. Can they hit their numbers without using that new asset sale trick? If they can, that's a huge sign the core business is strong. If they can't, watch out below. So really, it all boils down to this. Was that new accounting a one-time gimmick to pretty up the quarter, or is it a genuinely new, sustainable way of doing business? Until we get an answer to that, we expect this stock is probably just going to tread water.
And as always, just a quick reminder, this is not financial advice. This analysis is for informational purposes only.